So without further ado, let me real quickly introduce Kelly Smith. You know her as CEO of Jed Grow Consulting. She's been a medical spa owner and quickly increased that medical spa from 800,000 to well over 4 million in sales in about a year or so. Jerry is owns a medical spa bookkeeping service, and essentially he's going to explain why it's so important to be able to provide that service and what you need to look out for if you're thinking about utilizing a bookkeeping service. And the reason that's so important is because he used to be a broker. And so as you're trying to consider an exit plan for your business, you need to have all of your numbers in check in order to create that valuation properly. So they're going to get into that during today's talk, but just wanted to real quickly introduce both of them and hand it over. Hey, Kelly. Hey, Jerry. Kelly, I think you're muted right now. Jerry, you're muted as well.
There we go. Good morning, Jacob. Thanks for
there we go. A little technical difficulty this morning. So, hey, but it's all good. Nice job, everyone.
We're all here now.
Well, I was excited to meet Jerry because, often with my executive coaching clients, the first place we always start is the numbers, and the numbers tell the story. And I know Jerry's going to repeat that as well. But, understanding what a certified public accountant is, what is a CPA, what's a bookkeeper, what's a tax pro, what's an enrolled agent, accounting can be a term that people don't really understand exactly the roles. They have a CFO or a controller. There's a lot of different levels to accounting. And what I find in working with many of my clients is they usually have a CPA that they're using for taxes and for maybe big picture direction. But what they're often missing is that bookkeeper on that day-to-day basis who's entering in transactions on a daily, weekly, or monthly basis, who really understands the business and typically should have some industry knowledge, because this industry is different than many other industries. And using some of the parts of our profit and losses and statements, it's so helpful if your accountant has some experience in this industry. So when I say it's once or twice every single week, I talk to someone who's owning a practice who really doesn't have the right personnel in place and the right bookkeeping processes in place. And they ask me, who do I know that specializes in the industry? Because inevitably it seems to come back down to understanding our industry in order to create books that give you actionable data. That's what we're going to talk about today. Who are the different pieces? How do they fit together? And I want you to really understand what you need for your practice and why your numbers are so important. When I met Jerry, he specializes in this niche. He has been a business broker. He understands the ins and outs of the numbers to not only run your day-to-day practice, but to sell your practice at some point. And that comes up on a regular basis for me as well. So I'm really excited to go through and talk about bookkeeping specifically to this industry with you today, Jerry, and to share with people some information so that they can make sure they've got the right talent, the right contractors, the right people in place to be successful. So thank you so much for joining us this morning.
Yes, thanks for having me.
I think I'd like to just start with, what you to explain bookkeeping services and specifically to the med spa owners, what sort of values and what all you cover with bookkeeping versus, say, a CPA.
Okay, so good question. So yeah, as bookkeepers, what we focus in on is the day-to-day operations, right? So we're looking at what's happening in the business as it's happening. So think of a car, right? Everyone has a car. We have a dashboard in the car. It tells us, our fuel gauge. It has our temperature gauge. It has the check engine light that comes on every so often. Okay, and I can't tell you, I've had a kid that blew up his engine because he didn't check his dashboard. Okay, so I ended up having to replace his engine. And of course, for a business, if you blow up your engine in the business goes out of business. So think of it as we handle the dashboard, right? We put all the data together in the dashboard so we can discuss the information with the owners on a month-to-month basis to let them know, hey, maybe your cost of goods are a little too high, or hey, maybe your labor is a little bit off, or hey, why is your retail cost of goods at a certain, at this level when it should be down at a lower level? Okay, so all these little things add up to big numbers at the end of the year. And so that's what we provide.
And how did you come into the business? I love kind of that you shared with me a bit about being a business broker and selling practices and what you learned with that. But I'd love you to share that with the group.
Oh, sure. Okay. So yeah, I as a business broker, we sell businesses, and I saw a good niche in the medical sector. So I started selling medical sector business, and I still do, by the way. And I started getting calls from med spa owners. And so I would, of course, the first thing that I look at was what the first thing a buyer is going to look at, as well as an underwriter when it goes to lending or to financing, is the financial statements. And I would get these financial statements that I would just look at it, I would just shake my head, and let me give you an example. I had one client, she did probably 1.2, 1.3 in revenue out of her locations. And when I got her, and she was mainly a Botox shop, right? So mainly Botox. Cost of goods came back and it was at 10%. Well, that's unheard of in this industry, right? And so it just told me that, okay, the bookkeeper, the CPA, whoever they gave me this data doesn't understand the industry, because you cannot have 10% cost of goods in a Botox shop, right? It's just, now, if it's a medical practice, let's say it's a GP or another type of medical practice, yeah, you might be able to get down to that level, but not in med spas. And so that's kind of what made me start thinking, wait a minute, I can't sell this business, right? Because the buyer's going to look at it and say, okay, there's something fishy about this business. Why is this, the owner's playing around with the numbers, right? And of course, when it gets to underwriting, forget it. The underwriter's going to look at it it was just a negative. And this happened to me over and over again, unfortunately. And that's when I thought, wait a minute, I need to change this. Otherwise, I can't sell these businesses. And so, I have a very good friend, a bookkeeping friend. And so we started talking about this issue, and we thought, you know what, maybe you could help my clients out. And so I told him, or it's actually her, how to work the numbers, what I needed to see, right? What were the industry standards? What were the benchmarks, and where reasonably it should be at? And so from there, we just decided, you know what, there's a good niche here, and we thought, let's fill it. And so, 2 years later, here we are.
Well, it's really important. And, I noticed that the first place I start is the numbers, the profit and losses, and looking at services by type and capacity, and that chart of accounts, like what you're talking about. The most underutilized part I find is the cost of goods and understanding the cost of goods. And I believe that is because typically they're working with an accountant or a bookkeeper or a CPA that isn't familiar with the industry. So they really don't understand how important that is. And later on, we're going to talk a little bit about the common mistakes that we see and share some pearls with everybody here. But, in terms of, I think that missing part of the bookkeeper, a lot of times what I see is a manager trying to fulfill the bookkeeper role and turn it into like the CPA or the payroll company, or, those kinds of things. And they're not trained in it. They don't understand it. They might understand, may or may not understand software like QuickBooks or the various other offers, softwares out there. But boy, it can be cleaned up. So don't lose hope. If you've got a mess, even though it's happened and the milk is already spilled, we can go back and clean it up. We can. So it's not like all hope is lost, but it is so important to have your chart of accounts and your profit and loss set up correctly so that you can really know if you're operating at a profit and where the problem is. And Jerry and I were talking about this the other day. One of the most common things we see is just one income line at the top of a profit and loss. It's just like all the income, boom, thrown in there. And, they might not know how much is coming from injectables or lasers or retail or anything. All that the accountant cares about, the CPA, is how much money came in, how much money went out, and what is your tax liability. That is a lot of what their focus is. I would say taxes, quarterly taxes, and those kinds of things. So with that being the case, there's a lot in between there that needs to be understood so that you can diagnose the ailment that your company is experiencing if you're not making the money that you want to be making. You've got to be able to see, you need that speedometer, you need your gas gauge. And that's what I help people do, and Jerry helps people do. And I often want to recommend a person like Jerry who can really come in, clean things up and explain what needs to be done, sometimes train the manager to do those things or be able to affordably outsource those things. And that's really a critical part of the mystery of getting profitable and staying profitable and seeing a problem come before it really hits you upside the head, right?
Yes.
As far as people thinking about, well, I have QuickBooks, I have software, I've got it covered. Can you talk a little bit about the difference between having software and having a bookkeeper?
Yeah. So absolutely, no, the software is important, right? Especially, I know most people use QuickBooks, which is great, and that is, it's a tool. Okay, and so think about it this way, right? Back to the car analogy. Okay, so you have, when you're driving a car or racing a car, right? You have the car and you have the driver. Well, the software is the car and the bookkeeper is the driver. Okay, or in, like you said, in this case, it might be the manager. And in my case, in many cases, it was the actual doctor or the spouse who was trying to figure this out. And again, that's why, like you said, garbage in, garbage out. Whatever you're not putting in the right numbers, you're not going to get the right data out of it. But so to answer your question, yes, it is important to have software. It's, again, we recommend QuickBooks, and it goes back to, well, who's putting the input in there? And you had mentioned chart of accounts, and just in case people don't know what that is, those are basically categories. Okay, think of it as buckets, right? You have buckets where money's coming in from different, whether you're from your Botox, your fillers, your lasers, or whatever's coming. So that's what we mean by chart of accounts. But yes, so the software helps us track those different buckets or their different chart of accounts. But again, it goes back to having it set up correctly in order to track the data the right way.
Putting the right name on the buckets so that you can put the right
Yes.
things in the buckets, which comes up
Yes.
a lot with creating your point of sale software setup as well. Garbage in, garbage out. I'm sure you deal with that a lot as well. They're
Yes.
entering their appointments and their sales, and they're checking people out on their point of sale software, and that's often where they're pulling their data on how much revenue they did in injectables, how much they did in laser, how much they did in retail. They're tracking it there. But when that's set up incorrectly, again, it's fixable, but the data that comes out isn't intelligent data that you can make decisions with. An example of that, one of the things I see that I'm sure you see too, is the software training companies will set you up as Botox being a product instead of a service, so you can almost use it to manage your inventory. Your point of sale software is not supposed to manage inventory. It can for retail, mins and maxes, and you're selling things and you want to know when you're low so you can reorder. Botox is not a product. That's a back bar cost of goods item that should not be tracked in the point of sale. And I've sure run into that a lot. I wish that the trainers who set these med spa softwares up should know better than doing that. But boy, that can cause a real challenge, a lot like the cost of goods, not putting your injectable costs, your toxins and fillers in that cost of goods. So you don't know if you're overpricing, underpricing, if you're profitable, if you're not, you can't see that. One of the things you mentioned the other day that was really interesting is, what if they have multiple locations? Do they need to track them separately or not?
That's a good question. And I actually tried to sell one like that, where we ended up, so she had 2 locations, and then we had a buyer who wanted just one because it was closer to their home, but we couldn't give a valuation because the numbers were all jumbled together. And so that causes logistical problems, right? Because let's say your spa is doing okay, right? But we can easily get another 10, 20% in revenues if we knew the right data. But when you're jumbling all locations under one P&L, then we don't know where's the revenue coming from point location A versus location B, and also what about the expenses, right? What are the labor and cost of goods for location A versus location B? So if we can't pinpoint the problem, we can't fix it. So that's the problem of having multiple locations under one P&L. So it
sounds
hurts
like it sounds like taking your family to the doctor and only doing the blood work of the mom and trying to diagnose what's wrong with the kid.
There you go. That's never heard that analogy before, but that's accurate.
Because I run into it all the time too. It's like, oh well, overall I want to be more profitable. I need to figure out where my opportunities are, and all of this thrown into one place. you have to separate, even though they've got their different point of sales for they're scheduling their appointments, they need to divide up their costs. Even if they've got one Allergan account and they're buying it for 4 locations, whatever goes to that location, that invoice can be entered into the 4 different areas and you can divide it up. And a bookkeeper would know how to do that. A manager and a business owner might not know how to do that and often doesn't know how to do that. And, bookkeeping services and payroll services, which I recommend both of those things, can be very affordable. And, one of the things I was kind of interested is when you take on a client and work with them, if you could kind of share what that usual process might look like. I know it's all personalized, but, there's a basic flow to how that goes. Can you share that?
Yes, yeah. So that's called, so when we onboard a client, right? So we're going to find out more about the client and their goals. Like, where do they want to be 3 years from now? Are you looking to expand? Are you looking to franchise out? Are you looking to sell the business? Okay, so it helps us to know what your goals are, right? Because we want to help you get there. Okay. So we'll ask you questions about the business and about, how it started and where you want to be. And then we'll ask you more about the business itself. Okay. Are you mainly a Botox shop? Are you mainly doing lasers or, so we try to understand the business from the macro level so we can create our P&Ls and chart of accounts and so forth specifically for that spa, right? Because one spa in let's say on the East Coast, it may operate completely different than a spa on the West Coast. They might have different focuses. One might have lots of membership, the other might have no membership, right? One might be, again, mainly a Botox shop, the other one's mainly a filler shop. So we need to know how the business is operating, and then from there create the P&L so it's customized to that company. So therefore they'll have meaningful data.
So when you say custom, when you come in, like I know when we talk about the most common pitfalls, you and I have kind of discussed, and we'll talk about them a little bit. The chart of account pitfall is if you don't have cost of goods set up, which is a more profitable kind of expense to have. It's kind of like having a mortgage versus credit card debt. The bank looks at those two things very differently.
Right.
So this is similar to your chart of accounts, whereas if you're doing injectables, you need a cost of goods that is injectables. And that usually there's a 50% markup or better, plus you get all those rebates back from your company. Once all those rebates come back, you really need to know, if I did $100,000 in injectables, how much did it really cost me in products and things like alcohol syringes, the supplies directly used to give that. So your labor's not in there, but all your cost of goods is your supplies that are in the room in order to give that service. Once you get all those rebates in there and everything, you're often down at a 40% or a 35%, even though people think they're at a 50% cost of goods by how they price it. Once you discount it or you take in rebates, you really don't know what your true cost of goods is running. And that's what we were discussing, the other day, because once you start looking at expenses and margins, we're always talking about percent of income. Because the bigger you get, the higher your cost of goods it'll go accordingly to your services to some degree, especially if we stick to the injectables example. You've got to have injectables to inject injectables. You've got to buy them to inject them. So there's a certain number that we're thinking you're getting. Now, if you're trying to optimize your profitability and you're trying to make sure you get the most rebates and the participation that you can from the Alley Rewards program and the different Allergan programs as an example, you really want to know what are your margins really running at? Have you knocked them down to 45%? Are you at 42%? And then we look at that every month and look at whether those margins are going up or down. It's not always about the dollar amount. Can you share with us, percent of income is one of the early educational things I give to them in order to look at expenses. The first thing I do is have them run their profit and loss with the percent of income and explain what the industry benchmarks are. And that's the thing that bothers me the most when people are having a CPA or an accountant that has no idea what the industry, they can't tell you if you're doing okay or not because they don't have the industry benchmarks. So can we talk a little bit about industry benchmarks and percent of income and why that matters so much?
Yeah, so like you said, right, you want to see how much your expenses are, but not only just dollar wise, but percent wise. So and going back to you had mentioned cost of goods, which let's not forget labor as well, right? Because labor is huge too, right? If your sales have gone down, but your labor's gone up by a certain percentage, that's going to hurt you because you're running on what 20-25% profit margins at the end of the month on a good basis, right? If you're running
Yes.
your shop well, your margins are, should be between 20 to 25. Okay. Unfortunately, I've seen a lot of them down to 10%. And it's like, well, you spent all this money and time running and building your business, but your profit margins are so low because you don't know what you don't know. So anyways, back to your question about the percentage and all. Yes, it's important to keep, you want to watch what your cost of goods or your labor is compared to your sales, right? Because if you get above a certain number percent wise, then okay, it's gonna hurt you and your profit margin. Okay, so and it does vary from sector to sector, right? A restaurant cost of goods and labor is gonna be different than a med spa cost of goods and labor. So yes, it's very important to keep track of that, not only on a monthly basis for what it is for that month, but also comparison from prior months. So you want to see how your labor did compared to last month, what your sales did compared to last month, what your cost of goods would, and also not only last month, maybe even last quarter, right? Because of course,
Or last year.
Yes, ideally, if you can have a 3 years of data, because then you can know year to year where you're going. Then you can kind of project, okay, if I did this X amount, I know I can, push it up and hit my goals to maybe another 10%, 15%, but do it accurately, right? Knowing what the true numbers are.
Well, and if you guys, I mean, in my book, I do share the industry benchmarks for this industry. Like, rent should be under 5%, labor should be under 25%. A startup might spend up to 20% the first year in marketing. Typically, you need to allocate 5% to hold your market share. There's 50% margin on obviously injectables or retail or better. But understanding that, if you don't have a copy of the book, go to our website, Projected Growth Consulting, grab a free copy of the book, because this goes through several of the things we're talking about today. We're talking about benchmarking, setting clear financial goals, how to measure expenses, how to improve your ratios and your retention, and how to make your business overall more profitable. So when you're talking about, let's give them an example of, okay, well, let's say that we've just all been through a couple rough years here with openings and closings. And so many times I'm going back to like 2019 numbers for my clients, and I'll look at 20 and I'll look at 21, but 19 was more of a consistent benchmark year where I can look at, okay, well, your labor was running you 22 or 23%. Now we're up at 45, 50%. A lot of people are really up because they got the small business PPP loans to cover labor without having any revenue coming in. So I'm noticing a lot of the numbers can be very off. So I'm often going backwards and saying, okay, on a good year when things were running normal, let's look at those ratios and carry those across into 2022 for our goals and our benchmarking, instead of maybe some of the less predictable years that we've all been through. Do you find yourself doing that with clients as well, going back to the 19 numbers?
Oh yeah, yeah. And what's amazing is most of my med spa owners, their numbers look better now than they did in 2019. I think there was just so much pent up demand for med spa services that everyone just went back in droves, and so they were doing much better than they were in 2019.
I'm seeing revenues up, but I'm not always seeing profitability margins.
Right.
Growing. Yeah. We wish those two things were more connected. But that's where we get into looking at things like Jerry is skilled at, is where are we losing our profitability? And it's in those percentages over time and the benchmarks, and us knowing by working with someone who's experienced in this market specifically, which you guys have heard me say 100 times, if you're going to go get a website company and spend a bunch of money on a website, please use someone that is niched in this industry, because the way we sell these services is different than how you market and sell some other services out there. So every website company is not created equal. And it's the same with the books and bookkeeping, especially. If you've got it right at the bookkeeper level, that's what then turns over to the CPA and taxes and global bigger ideas of expansion or selling and things like that. But it starts at the bookkeeping level. So if you don't have that in place yet, you're early in the year. We're 2 months, we're 3 months into the year right now. That is a good time to make a shift if you need to adjust like a chart of accounts or the way you're tracking things. It's an easy time to do that, because you can go back retroactively and make some journal entries for January and February so that you're really looking at the right apples and apples, all year long. So Q1 is a great time to get in front of this if that's something that you're experiencing. We'll have an offer at the end of the webinar where you can get in touch with either of us. But if you're there, it's fixable and it's really, really important. And your bookkeeping services are much less expensive than your CPA, you know, and your CPA can't even, they're not even offering those services. And I'm just saying every single week, I've got 1 or 2 executive clients truly in a bookkeeping challenge. It's not the CPA. It's training the bookkeeper to understand the industry or the manager or the front desk staff that's receiving product and stuff like that. It's really critical, and it makes it, you can hire a consultant, you can hire someone to sell your business, but there's not a lot we can do until we get a grasp on the numbers, because that's how we measure changes and improvements.
And also the sale price. If you're looking to sell it.
Exactly. Yes. Perfect. Yeah. You know, one of the things that when we talk about valuations and buying and selling practices and things like that, I know memberships are such a key important thing to add a few years before you're selling, if you're looking to optimize and get the most money out of your practice. Can you share a little bit why that has such an impact on valuations?
Yeah, because it's considered recurring income, right? So there's more value to a business when it has money coming in every month that the new buyer can count on, right? It's kind of like Costco, right? They make a killing just selling memberships, right? But now you're hooked, right? You keep going back because you're buying stuff at supposedly a lower price. Of course, you're going to buy more of it. But the point is that you've got recurring revenue coming in now, and then you've got now you're in front of your client more often, so they're more apt to come back to the med spa rather than jumping around. So yeah, that is very valuable. And not only just for valuation down the road, but just for now, right? I mean, why wouldn't you want to have recurring income? Why wouldn't you want, an extra few $1,000s coming in a month for not really doing a whole lot, right? And that just adds on to your bottom line at the end of the year.
Well, and it really also points out that retention percentages, a lot of people don't monitor those. Average ticket and retention percentages, those two KPIs or key profit indicators are really critical in controlling your profitability, because the most expensive thing you can need to do is to go get more clients, internal or out, external or internal. Employees cost you a lot of money if you have to replace them and get new ones. And the same thing with clients. If you're not retaining your clients, it's kind of an invisible profit killer that people don't even realize is there, because it costs you 5 to 25 times more to get a new client than to take care of an existing client. And in our industry, retention is related really closely to the number of different services that people use from your practice, as well as the number of products that they purchase. There's a relationship there that I go into a lot of detail in the book, but in our industry, there's a correlation between those two things that is substantial. And if you're only picking even a couple things to focus on in terms of your KPIs, obviously you're looking at your revenue, you're looking at your margins and your profitability. I would also say it's your average combined ticket and it's your retention ratios. Those are critical things to be aware of whether they're going up or whether they're going down, whether they're in the industry standards. Those two numbers can tell you a lot about the physical health of your business.
That's right. Yeah.
So tell us a story about maybe one of your clients that you're able to help and turn around and maybe even sell, or give us a glimpse into the life inside of Jerry and your bookkeeping experiences.
Okay. Well, I got so many of them. It's crazy. Well, I had one client. I won't say where, but it's in California. They had this high volume med spa. And it was a husband and wife team, right? And so they did not med spa, but also day spa. And so the revenue was almost equal for both. It was that good of a volume. And the husband was quote unquote a business consultant, and he does the books. And so when it came time to sell, he sent me the financials. I'm looking at it. He was missing cost of goods. I'm thinking, how do you miss your cost of goods on your business, right? And so of course we had to go back a couple of years, clean it all up. And then now that we had accurate numbers, then we were able to sell it. But it's just crazy how, again, and I get it. They don't know what to look for, right? They just think, oh, I'm going to save a lot of money by doing this. But the reality is no. But at the end of the day, you're spending 3 to 4 hours a week on tracking your numbers. That's a lot of time that you can just spend finding more clients or working with clients or working on the business. So anyways, yeah. So I've had many stories like that where I just we had to just clean up the financials, and then it was sellable.
Well, it's kind of like selling a house. You can ask whatever price you want for your house, and someone can agree
Yes.
to pay way over market, but the bank is not going to finance it, and it's not going to.
Right.
So you might have a very profitable med spa, and you can prove it with your bank account, your deposits, and your tax return. But if it's not bankable, if you can't
Yeah.
understand, what the true costs of running this business are, you're going to have a heck of a time of, number one, getting it financed. If someone needs any financing, it's going to become virtually impossible. But even just to have the conversation of selling the business and talking about the basic expenses to run the business and pulling out your anomaly expenses and understanding how to prep your financials for a sale. We all run extra expenses through small businesses that are not necessary for the business to function. And those are called anomaly expenses that every owner will take some advantage. A lot, if you know you're going to sell, typically a couple of years before, people will really pull those kinds of expenses out to have very clean books that are clear of, like, no matter who's running this business, this is kind of what the margins are running, and this is what you can expect. That's truly the goal of your financials when you get ready to sell. And your goal during the time of operating is knowing, how am I doing against industry averages? How am I doing against my past performance? And where do I have an opportunity to improve? And by understanding the industry averages and things like that, if you're already down at 5% of marketing, you're not going to spend a bunch of time figuring out how to save money on marketing. Right? If your payroll is already down at the 20-25%, you're not going to waste a lot of time figuring out if you're overpaying. You need to understand where is there room to improve, and what am I already doing really good at? So I focus on the vital few that are going to move the needle. And I see it very often that a lot of practices are simply focused on the wrong indicators. They don't
Right.
even know that they're not going to get that any better, but over here is a dumpster fire, but they don't even know that it's happening.
Well,
So,
what's worse is that when you do have a buyer that does know what they're doing, like I had one practice, it was 2 locations, and again, the numbers were off, but the buyer had a very clean operating med spa, so he knew his numbers. He knew what to look for. And when he got the books and records, he just thought that the seller was trying to put a fast one over him. Right, because he's thinking, wait, these numbers, there's no way you can hit these numbers. Your labor and cost are way off. I know, because I own a med spa that runs very well, and it was just not believable, even though the sales were there, right? So that's how important that is just to keep to have your numbers straight. Not only for but also just for operations for every day. Again, you're working there. You spent probably a good $500,000 building your med spa up. You want to make sure you're running it as best as you can, so you can pay off that loan again, right? Because you probably got an SBA loan on it or something. Pay it off as soon as possible, because that's profit in your pocket.
yes. Well, I'm just surprised. I know that so many of the offices are owned by physicians that are motivated in, patient care and really in love with that side of the business. And sometimes it's uncomfortable. It's outside maybe your comfort zone of looking at numbers and understanding numbers. But once you get things set up correctly and you understand your profit and loss, it's not uncomfortable to look at that. Revenue, right. You need to look at your revenue, how you're doing every single week. That's why we have the revenue predictor on our website for free. If you don't have it yet, go download it, because you really need to look at revenue on a weekly basis. And then you look at your expenses monthly and quarterly. And even when something raises its ugly head as far as being too high or too low, once you start making operational changes to address that, it kind of takes a while to show up of improving and lowering expenses. It's almost more of a quarterly glance of really seeing if your percentages are beginning to get lined up to where they should be, versus revenue is something, sales, you really want to be, you might want to know your day-to-day, your hourly rate, your against your capacity. But expenses, that's kind of the long game. That's really comparing, understanding, and monitoring, putting different standard operating procedures into place to lower or adjust those to where you want them, and then measuring over time. I always say, look at revenue weekly and expenses monthly and cost savings quarterly.
I think that's fantastic. I think now's a really good time for us to transition into question and answer, Q&A.